S&P 500's at all-time highs. You got the Federal Reserve getting ready to cut rates, though, at these all-time highs. How in the world does that even make sense? And even to add to that situation, they're talking about a 50 basis point rate cut. Now, for the life of me, I don't get that at all. We're still dealing with inflation that's above the Fed's target of 2%. You have the CPI that came in slightly hot. You have the producer price index also came in slightly hot. Yet we're cutting interest rates not by 25 basis points, but a 62% chance as of today that we're going to cut them by 50 basis points. Now, with it being like a 60-40 edge in favor of the 50 basis point cut, this is the first time in a long time that we've gone into the Federal Reserve meeting with uncertainty. I would say it's probably closer to 50-50, and I do think that if they cut rates by 25 basis points, there's a good chance the market's going to have a violent reaction because it's pricing in that 50 basis point reaction. But then on the other hand, too, and I think this is kind of an interesting thought as well, because we always think with a binary mindset in the sense that it has to be like 0 or 1. We have to either go down or we go up. It goes down if the Fed does this. It goes up if the Fed does that. But it's not necessarily like that. In fact, there's a chance that it goes down regardless, because if you have the 50 basis point rate cut, what's a problem with that is the fact that it could instill a lot of fear. That is already getting baked into the market as we speak. But when they actually do it, is it going to be a sell the news effect that creates a lot of concern, causes people to freak out, and creates a sell-off in the broader market? So I think either scenario could actually result in a sell-off. Now, I say that, and I'm not even short on the market right now. I'm still long. I've been trimming my positions up while we've been on this 6-day rally on the S&P 500. But as we get closer to it, I'm hoping to, trim my positions a little bit more. I'm still sitting heavily in cash. But let's look at the technicals here. Let's look at the charts and see what we're dealing with. First off, and I've been highlighting the AVWAP anchored to the July highs quite a bit. You can see where we hit it back in July. We sold off, hit it again in July, and then sold off into early August. And then we went on this massive ramp. I thought maybe we would stall out at the AVWAP like we did before. We didn't. We blew right through it. And then in early September, we broke back down below it. But you'll remember, we had a little bit of a dead cat bounce last week in the very beginning of the week. And this Wednesday, this is what really changed it all. And one of the things that I would tell you, too, when it comes to trading is that you have to be flexible in your views. You see it far too much on Twitter and on stock tweets where traders are like, okay, you always have to be either all bullish or all bearish. You can't flip-flop. Well, this isn't like moral convictions when we're talking about stock market direction. It doesn't have that same kind of level of importance. I can be bullish one day and I can be bearish the next. And honestly, when we got this kind of a sell-off right here back on September 6th, I thought I was sitting in pretty good shape there. I had a decent short position on. And then Monday and then Tuesday, okay, we got a little bit of a rally, go back up to 50-day moving average. All right, fine. CPI came out though. And I would be lying to you if I didn't say when we were sitting right down here at 540 on Wednesday of last week, I was like, oh yes, this is going to get really good here. And I thought that. But then what took place thereafter was this massive reversal. I mean, this was a 150-point reversal to the upside, and it really blew me out of the water in terms of just being totally stunned by how much of a reversal that took place, even though the CPI came in pretty hot. Now, a lot of that had to do with the expectations changing around the Federal Reserve, where people were beginning to expect a 50 basis point rate cut. And as a result, we got that huge reversal. But again, you can't be so dogmatic on your outlook with the stock market. So here I was very bearish. When we started getting up into this area here, I said, okay, my positions are starting to get hit some. I have taken some profits off the table, but I might need to go ahead and close out the entire position. And I did. The following day, I got long. And so far, that's been a good trade as well. Now, that doesn't always work out that way. I have positions that lose me money at times as well. But in this particular situation, if I would have been dogmatic about having to stay short on the market, this would have been a bad situation for me. I would have been still losing money to this day. But because I was not dogmatic, but because I was willing to flip from bearish to bullish, I was able to do all right there. Now, another area that I would want to tell you is watch this AVWAP right here going back to the August 5th lows. When we established these lows here, I anchored an AVWAP to it. And then when we pulled back, it looked like we were just going to go ahead and break right through it. But we captured the next day, which shows that there is some support there. We tested it the following day. We tested it on Wednesday of last week. And yes, we did break below intraday, but we held it into the close, and we've been rallying ever since. I think with this AVWAP off of the July highs and this AVWAP off of the August lows, you've got a nice layer of support here that if we do get a sell-off going forward, you're going to want to watch that level for potential support as well. Now, I would be remiss if I did not bring up the obvious resistance level that we're sitting at. And yes, this is the one right at all-time highs here. We bogged down at it back on August 30th. We're not able to break through it. We sold off for 4 days thereafter. Then we went on this 6-day rally, which we're still on technically. It wouldn't surprise me if we get a gap above it. However, the closer we get to this FOMC, I think the less likely it's going to be because the volume's going to get less and less because people are not going to be as willing to make as big of a bets ahead of that FOMC statement. So there is the potential that if we don't break above it before the FOMC statement, we're setting up for another rejection at this resistance level. Again, if we see the resistance get kicked in, we need to watch this support level going forward. Also, and I don't necessarily think it's a strong support level, but I do think that it's still worth watching to see if this one develops into anything. The support level here off of the August lows. Now, it could be two forms of that. It could be this little area right here. And I know maybe it looks like I'm splitting hairs, but it could be off of this level there. And then this was just simply a break of it intraday that closed back above it. Or we could be talking about a support level that falls below or just right there at the lows from September 11th. So two different levels. We want to see what happens if we do get a pullback to the level, how it corresponds. This could be a really nice opportunity as well to buy the dip because it will also, if assuming that it holds, you have these two AVWAP levels that are going to be corresponding with this rising trend line at that particular time. The volume's not all that great. You look at some of the market internals like the T2108, you're sitting at 58%. So 58% of stocks are trading above their 40-day moving average. I do think that that's a pretty healthy reading, but there is a small divergence that's starting to arise that, again, we'll want to be careful of is that, okay, the highs that we made in July, the all-time highs, we got right back up to it, but it was a notable divergence there in August. And then here we are again at all-time highs again, and we have a lower high yet, again, even more dramatic than the lower highs we saw before. This all goes to say, I don't necessarily think that you have to throw trading aside and say, fine, until the FOMC passes, I'm not going to do it. But for me personally, I'm less and less willing to get long as we get closer to that FOMC statement. So unless I see a really good trade setup tomorrow that just is on fire and something that I really want to take, I'll probably withhold from getting long on it. Day of the market, I always have a rule. I don't get long on the day of the FOMC statement. I wait until after the announcements come out. And nowadays, you got to wait till after that presser is finished, which usually takes you to about 45 minutes before the closing bell. So there's not a lot of time at that point either. But overall, what happens from the FOMC statement going forward, nobody actually knows, but be on the lookout for a double negative going into it to where if the 25 basis point is the reality of the FOMC decision, that's going to be a disappointment to the market. If you have a 50 basis point cut, the reality is going to be what is wrong that the Fed is not telling us at this point in time. That's going to be something else that could cause some havoc in the market as people become more fearful of what might be out there that we're not being told. If you enjoyed this video, I would encourage you to like and subscribe to my channel and tell me down in the comments below, what are your thoughts? What are you thinking, I guess, in regards to the FOMC decision? How do you think the market's going to react? And how are you positioning yourself? Tell me in the comments below. I'd love to have a discussion with you guys. Thank you, and God bless.